Hello and welcome back to another episode. We have a great show today. This gentleman has got like three master's degrees. I didn't go to college, I have to admit that. So pretty impressive background, three master's degrees. You worked in construction management, a structural engineering firm worked with Boeing, on the space shuttle main engines. And then you became CEO of a company called Mobile Illumination. And you grew that by over 2,000%. So yeah, like you've done a lot. You've also were on TV. Is that true?
It's all true. Yes, it is.
What did you do on TV?
So probably about 12 years ago, I got picked up as an engineering expert on a show just by happenstance, and applied for it, got the position, and then they wound up keeping me on for the entire season. And then that show got picked up for a second season. They made me more of a co-host. And then that production company did another show, and they made me a host of that show. And then I wound up getting a Hollywood agent, and she started working for me on getting me on different things. And my latest venture was on the Smithsonian Channel and National Geographic, a show called Inside Mighty Machines. And we just dove into these giant machines, took them apart, find out how they worked. I interviewed a bunch of people, like historical type people, to find out how it was designed, and just basically explained how it worked. And then we did 6 1-hour episodes for that show.
That's so cool. I actually did
Cool.
I was on TV too. I was on HGTV.
Oh, good.
In 2013, we did a TV show called Flip It to Win It, and I was one of the teams that flipped. So I did 12 episodes. That's my claim to fame. I actually love TV. I probably wouldn't do another house flipping show because they're so vague, but I do enjoy the whole TV production. So hopefully one day I'll do another show. Not sure what yet, but anyways, it's cool to hear your background, that you've done so much in television as well. So please welcome Chad Zdenek to the show. He resides in Southern California. He has, he's a GP in over $85 million of deals and growing, multifamily, self-storage. He also does some LP investing, which is limited partner investing. And so you got a really amazing, diverse background. You worked on a lot of stuff. At some point, it looked like about 7 years ago, you caught the real estate bug. What was it about real estate that caught your attention?
Yeah, so I'd like to say that I started quite a bit before that in construction and structural engineering. So I've always been kind of in the building world, real estate world, and I knew a lot of people that were successful in it, and a lot of very rich people. And I thought, like, I had always wanted to get into it. My brother and I were running a lighting business at the time, and we grew that business basically from nothing to about 75 employees and 3 different warehouses here in LA. We're the largest company in LA doing it, but I'd always wanted to get back into real estate, and I knew running a business was great because I'm an entrepreneur at heart, but it was a ton of hours, and you just, like, if you weren't there growing the business, then you weren't going to get paid, right? Whereas real estate, especially like on the passive income side, as you know, you can make some investments and those can continue to grow over time. And if you do it right, they can throw off cash flow as well that you can live off of. And by the time you include the tax advantages of real estate and the advantages to leverage, which you know better than anybody as a mortgage guy, by the time you add those things into the mix, real estate can be a great way to grow a business and create passive income. And so that's why I made the shift.
So like when you got into the multifamily business, you started doing projects local to you first. How did that develop into like starting to syndicate? Did you invest as an LP first, or did you start doing your own projects, kind of smaller ones? And you said, okay, I'm ready to scale. I've got the experience. Obviously, you get the construction part, which a lot of value add deals, you need a little bit of construction and project management skills, and you have those skills. So how did you get into the multifamily space?
Yeah, so my start was actually a little bit unique because my first deal that I did, first syndication deal I did, which for the listeners is basically the person that brings the whole deal together, I did on my own. So I was a solo GP. It was a $2.5 million deal. I raised 1.2 million for a 10-unit apartment building in Long Beach, which is about an hour and a half away from me. So it was close so that I could be there, which gave me some comfort in knowing the project. And but it was definitely nerve-wracking raising that much money, my first raise, never doing it before and doing it by myself. That was definitely nerve-wracking, and there's probably less risky and less stressful ways to do it. But that was how I got my first start.
That's cool. So the majority of your holdings are like you are investing in California, and you're investing in Florida. What attracted you to Florida?
So I actually made a shift like partway through COVID, when LA was having its eviction moratoriums and shutting down businesses, and it was a tough time. And I decided at that point, and actually we're still in an eviction moratorium, if you believe it or not, and we're filming this here in March of 2023. So partway through, I decided I wanted to diversify out of California a bit more. I had been doing LP investments, limited partner investments outside of California, but decided I wanted to do more on the GP side. And my first deal was actually in Florida, and I partnered with a group of guys I knew from my mastermind group, and we took down a pretty big project in Orlando. It was a $53 million apartment building project. And that was great. And it's really nice to work in Florida versus California, which has a lot of legislative risks, which are very hard to underwrite, right? I mean, I know you've done a lot of underwriting in your days, and there's a lot of things that we can kind of control and make assumptions of, and even some safe assumptions. But when you talk about legislative risk, meaning you don't know what rules they're going to change a year, 2 years, 5 years down the road, and how do you underwrite for that, right? Is very difficult. So that was a challenge for my projects I had going on here, which most of them I still have actually in Southern California, but I'm not actively acquiring anything in here now. I'm much more active in Florida and soon to be Texas here. I've got a self-storage project I'm working on in Florida, in Texas.
Cool. Is that a ground up project, or are you buying existing self-storage?
Existing. It's a portfolio of seven properties, existing storage. Yeah.
Or is that going to be a co-GP type of deal, or?
Yep.
Yeah. So what do you love about the syndication world? I mean, you can obviously do bigger deals. You can, a lot of the people we interview, eventually they get into syndication because there's a lot of people with money that don't know what to do with, right? And so you're able to kind of get them good returns and also kind of grow your business at the same time, which seems like a phenomenal. It's interesting too. The syndicators that seem to do the best in syndication, they all seem to have an engineering kind of background similar to yours. And I've noted that, and it's just interesting. I think it's just the way engineers think, and that you're better at kind of like the spreadsheet and kind of the projections, the pro forma type of thing. And I think that those kind of things don't intimidate people with a kind of your background. Would you kind of agree with that?
Yeah, totally. And I think it's amazing how many engineers are actually in real estate. On my big deal I was telling you about in Orlando, 5 out of 6 of the GPs are engineers or have engineering backgrounds, and even worked in engineering. So yeah, it's quite remarkable. But yeah, I do think it is a good background, a good skill set for it. And certainly we know how to analyze problems. We know how to work with spreadsheets. We know how to mitigate risk, which is becoming a lot more important in the last year or so. And it's helpful. But that being said, there's a lot of solid people, like people, you mentioned that you didn't go to college, but look, you got a much earlier head start than I would have, being able to get your hands dirty and do the hands-on learning. You weren't locked down with debt. So, it's not a very clear case which way to go. You certainly can be successful whether going to college or not. For me, my dad was a doctor, my grandpa was a doctor, and they're very much like set on traditional education. And that's kind of why I went that route, but certainly by no means the only way to be successful.
Yeah. No, I mean, I always tell people it was funny. I didn't like to learn, or I didn't really pay attention growing up to school. But as I got older in life, like today, I learned like I'm always taking classes, workshops. Like, I know so much now because I found something I was interested in, real estate, right? And so like how you can structure deals, cost segregation, all these things that like the really wealthy people utilize, right? And I think a lot of people don't even know what cost segregation is, what accelerated depreciation is. And like, there's people like to this day that pay like a ton of taxes when they could get around that legally by, investing in different real estate deals or utilizing Section 179 and different deductions like that. And it kills me. It kills me when I see these people that just don't get it. And, I'm always learning. And that's fascinating to me because I wouldn't want to make all this money and pay half away to taxes if I could legally not, by just opening my mind to these alternative investments. That's why syndication is so powerful. And so, I don't like, for me, I don't want to be the operator necessarily, but I would like to be a general partner because I have a big network of investors and stuff. So now that's kind of where I'm working, instead of doing like the onesie twosie deals. I'm like, you know what? I'm not the operator, but I could definitely raise money and for the right projects. So that's where I'm gearing my business, where I think there's a lot of opportunity to find good GPs that know what they're doing. And like, obviously I'm going to do what I can to underwrite the deal. And, but I think that's a great way to do it because it's like there's strength in numbers too. And that's what syndication is, more of a team sport once you start going and buying these $50 and $60 million buildings like you're doing now.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again.
What kind of pivoting a little bit, the market's crazy right now. There's a lot of fear in the streets, but obviously when there's fear in the streets, there seems to be a lot of opportunities that are created. How are you pivoting your business and what opportunities are you looking for today?
Yeah, it's a good point. There's definitely some dicey times right now. And I totally agree. Even in the stressful times or down times, there's always opportunity. So for me right now, what I'm looking for in real estate, you can still find good deals, and more importantly, you can find sellers that are willing to retrade or willing to negotiate on the price a lot more. You're not doing best and final offers like you were before and really raising the price a lot on these purchases. So if you find a deal that pencils, that makes sense, then what I found is that, and it's taken a little while, it probably took, I don't know, maybe 6 months or so for sellers really to come around. But if the debt changes, sellers understand that the deal still needs to pencil in order to make a deal, right? So they're willing to work with you if your debt changes over the course of the escrow or from what it was a year ago. And what I mean by that is, like, you can incorporate even like interest rate cap purchases, right? So you can buy an interest rate cap so that your mortgage rate or your floating interest rate won't go above a certain amount, and you pay for that, right? So like on my last deal, we paid like $800,000 for this interest rate cap, but that was for like a $33 million loan. And if I would have bought that a year ago, it probably would have been like $150,000. So those interest rate caps have skyrocketed in price, but it gives you the surety to know that, hey, my interest rate's not going to go above this. So I can underwrite it. And as long as I can still make the deal pencil and cash flow, because we only do cash flow deals, then that's something that's worth looking at. So that's one way. It was with sellers like coming to the market in terms of selling the property and incorporate some of the debt. The other thing that you can do now is start to get creative on some of the financing. So besides doing like an interest rate cap, you can also do seller financing. So you could tell the seller like, look, okay, if you want your price, that's okay. The debt is up here in cost, and I need to do a seller carryback financing for part of that. And then let's make that interest rate work. So, and that can help create a win-win situation. So let's say the seller is like really fixed on their price, right? They don't want to retrade it. They don't want to come down. Well, that's okay. But my debt is up here, and I need some seller carryback financing to carry part of that would be second in position to the senior debt. And then they're not as worried about what the interest rate might be for that. So like we did a portfolio in short-term rentals in St. Petersburg, and we got like 4% seller carryback financing on 25%. And we told the bank, we said, hey, we're going to do a 50% LTV on this. So the bank was happy, right? It was a low LTV, and they were able to give us more aggressive terms because it was a low LTV. They were in senior position, which also helps. And then the seller was like, okay, yeah, I'll do a 25% carryback. I know what these properties are doing. And he was willing to do a 4% carryback, which is a great interest rate. And so everybody was happy. And in the end, we only had to raise 25% on the equity stack. So people knew, or the investors knew, that with that type of leverage, they were going to be getting good returns. So it's like that type of creative financing that you can do right now that would have been really, really difficult, if not impossible, a year ago.
Was that was a portfolio of single family STRs, short-term rentals?
No, it was small commercial buildings that we're converting like half of the buildings to short-term rentals. So it's kind of unique. We have property, my partner has property management in-house in that market. So we're able to do property management on the long-term rentals and the short-term rentals in the same building, which is pretty rare because they're two totally different skill sets from a management standpoint. And usually you won't find a property manager that'll do both. So, but because it's in-house for us, we're able to do it.
Yeah, that's cool. So it was like let's just say it was a 30-unit building, and like 15 of the units are long-term and then 15 are short-term, and you can boost the cash flow like significant if they're in the right markets, obviously. I'm seeing a lot of investors do that as well, which I think is an interesting model. Yesterday, we did a meetup, and the gentleman was talking about extended stays, midterm rentals, which is also a pretty interesting model, doing furnished rental for traveling people, because a lot of people are traveling. You got traveling nurses, you got people traveling for work. And so I think there's like a huge opportunity in that space, especially with like smaller multifamily where you can kind of reposition that. And I just find it very interesting. And a lot of that is automated too. I think the real headache comes down to the turnover is kind of a pain, but if you can like systematize the turnover and have everything automated with technology, right? You have AI now that can they can respond back and forth when people are going on Airbnb and VRBO, and it's pretty interesting. I don't know, from a multifamily standpoint, I think banks and like these non-bank portfolio lenders are finally understanding the STR a little bit more. There's still not huge lending in that market yet, but eventually it's going to be, everybody's going to get it, and I think that will open up a lot, because it's interesting to see how the short-term rental market has just blown up. I mean, I think people have to be careful because depending on where you're buying, and but I took a workshop from a guy, and that's all he does. He buys small multifamily and he converts them to STRs, and it's pretty amazing. And they're like one bedroom, and they're not in the vacation area. They're more like the staycation where business travelers and things are using them. And he's doing very well. He lives in another country and runs his business from Colombia. And he's a
Tim Hubbard, would it?
Yeah. Tim Hubbard. Yeah. I had him on my podcast. Yeah. So that's why I love doing the podcast, because I get to talk to people like yourself and like, what are you doing and how are you doing it? And then I do a show with a guy named Vinny Chopra every Friday. He's a syndicator. Yeah. So he's interesting character. Now, what mastermind did you get involved with when you were like starting out in Vail, when you want to dive into the syndication world?
Yeah, so I joined the real estate guys group, Robert Helms and Russell Gray, and they've got two mastermind groups. One is a syndication mentoring club, and another is Inner Circle. And the inner circle is only like limited to 20 people. So I started right at the top, if you will, with the inner circle. I've been a part of that for a year and a half. And then I also joined Hunter Thompson's Raise Masters group, which is great. And especially, for, you had mentioned you want to do more capital raising and co-GP stuff. Like that's what that mastermind is for. And it's been really great as well.
Okay, maybe that's where I'll go. I'm doing just starting out right now on a project in Texas with some guys that I've known for a long time. They're doing a hospitality project, and the reason why I want to, first of all, the first phase is a very small raise, so to me it's achievable. I know the guys personally. Like the idea they have is smart, right? First phase, essentially they're putting on 10 STRs, and that will cash flow. And then second phase is a big raise. It's like a $17 million raise. The first phase is only 2.2 million. And then it's cash flowing, because that's what I liked about it. I don't want to do like a long, like big construction project raise, right? Because there's a lot of misfires. But phase two, you're cash flowing the whole time, so you're not like stressed that you're debt service it. You have to debt service it. So I look at projects like that, and so it's interesting. Yeah, it's a different world, but I think there's like $26 trillion of retirement funds. I mean, there's so much capital, and they're leaving money in these like non-performing assets, or like these mutual funds and whatever they're putting their money into, and it's crazy that people don't know how to grow compound their wealth. My aunt, for example, is a perfect example. I was talking to her the other day, and she's going to one bank to the other bank to see who has the higher savings account. It's like 0.25% different. I'm like, you need to diversify into like some low risk, like syndications where you're getting like 8 or 9% that are super secure. I mean, there's obviously riskier syndications that have a lot higher returns, but it's amazing, like the different mindsets of people. It's like you work your whole life and you have this, decent nest egg, but you could have probably 3 or 4 or 5 or 10x that. And I think that's what the responsibility of syndicators are, right? Is to educate people. And then as you grow, because now you've built a track record, it's probably now, it's easier now to raise money, because once somebody performs, they're like, oh, this guy's already done, 10 syndications. You build a track record. So the first raise you did by yourself too, which was probably nerve-wracking. And you did it, and the project went well. And then when you get involved, did you meet a lot of the people that you're doing business with through your mastermind?
Yeah. And that's pretty important, I think. So one of the things I wish I would have started earlier in my career is just networking and working with mentors. I never did that so much. Like you'd mentioned that you do a lot of education now, and I do the same. And one thing I used to focus so much only on the education. Like I would literally go to these conferences and try to take in as much information as I can, and really only focus on that, but not focus on the networking or the relationship side. And so I got pretty smart. I knew a lot of stuff, but I didn't have as good of relationships or networking as I wanted. And I realized that there's a lot of leverage you can have by having a really strong network. So I've really tried to do a lot more of the networking now and relationship building, which is really important. And with that, able to leverage into doing more deals. So for me, joining those mastermind groups has been great, because those are the people that I'm partnering up with for the most part. And you got to have that level of trust, which it takes a little while to build it. But if it's someone like in your own group, then like they're not going to want to violate that trust, because then that kind of gets out, and they'll kind of have a scarlet letter, if you will, on their name for doing something bad inside the group. So you automatically get like to a certain level of trust. It's not 100% there, but it definitely moves you along a lot faster.
Yeah. And then there's always, there's real estate's not always making money. There's once in a while you're going to run into issues. I think real estate, you can work through any issues, but like, I hear horror stories, like, a property that got burnt down, multifamily, and they're stuck because the insurance isn't going to cover the delta. And like, there's all these situations that that may arise. So you have to be able to have the resiliency to work through, right? Like, I mean, it's not, I think over the last couple of years, it's, there's been some crazy appreciation. I think now is when, like it's going to be tougher. The returns are probably going to be, the expectations need to be construed to the LPs that, hey, this isn't like, you're not going to get 3x equity multiplier. Like, this is more of like a normalized market, right? And so I think setting expectations too, it's good now because I think a lot of people pay attention and they're seeing like the banks fail right now, like all this stuff. And so I think there's going to be more of a need for people to diversify into like hard assets like real estate. So what does your day look like today?
So I try to,
on a daily basis.
I try to split my day, if you will, or basically my efforts into 3 buckets. Maybe a third of the time looking at new deals, underwriting deals, that sort of thing. A third of my time managing my existing projects, and then a third of my time working with investors, finding new investors, putting together marketing materials like for investors. So generally, like those 3 buckets are where I split my time, and it's definitely it builds like, you start building up a portfolio. You mentioned like 85 million, and now I'm actually just over 150 million now. I think we gave you an old media sheet. Sorry about that, but so it's like 150 million of assets under management, and you need to start like to building more of a team, right? So that's kind of where I'm at right now. Like I said, my last company, we had about 75 employees, and right now it's me and a bunch of VAs, virtual assistants, and my partners, right? So it's a much different team right now, but managing that portfolio is taking a lot of time. So it's not even thirds right now. I'm definitely skewed a lot more towards maybe the asset management side than I'd like, and a lot more towards like investor relations because I have more investors. So it's probably a little bit less on deal searching right now and underwriting. I still only have 24 hours in a day. I haven't fixed that one yet.
Yeah. So what do you have like your vision of where you want to go? Are you looking to do like a 500 million portfolio, or is there like a cash flow goal that you want to come up with? Where do you, it seems like you've had so much success over your career. I mean, I'm sure you had struggles like everybody, but, what's kind of like, what's the vision? Where do you want to see yourself in like, say 5 years from now? Like, what are some of your ambitions and goals to go from where you're at right now, to the future?
Yeah. So for me, I really focus a lot on the passive income side of things as a goal. I'd like to be bringing on $100,000 a year in passive income, like compounding, if you will. So, and then eventually to have all my living expenses covered by the passive income. So I'm not there yet. I'm definitely making some headway, but definitely not there yet. I hope within 5 years I can get there. But until then, yeah, I mean, it's, I'm kind of in the trenches right now. I'm working a ton of hours, at least 6 days a week. And yeah, I definitely have my challenges. I'm not done with the challenges yet. It's pretty tough.
Yeah. I was just at a mastermind with a lot of very successful people. And I went up to one of my friends I hadn't seen in a couple of years, and it's like, and I always paint the picture that he's very successful. Like, he has no worries, but he's the first thing he said is like, oh my God, like he had a bunch of single family properties in Florida, and somebody did like a deed fraud and like deeded the properties into, and then for some reason he had to sell all those, and he had to quickly do a 1031 exchange. Then he bought all these houses that needed rehab to turn into SDRs. He was just telling me this whole nightmare story, and I'm like, man, this guy, like, from the outside, he's making a couple $1,000,000 a year. He's a young guy. What worries does he have? But really, everybody, I think real estate is really like, you can usually work out every problem, but it does take some grit and like resiliencies. And I think like we see these people like yourself, like, they have $150 million under management, which seems like a big number, right? But it's also like, hey, there's a lot of investors and partners and moving pieces. And so like, it as I get more used to it, like, people tell me they're buying $60 million buildings and things like that. It's just, when you're like, wow, that's amazing. You can do that. Right. But it's really just compounding. And most of the people that are doing that have like several GPs that are, helping raise that 16 or $18 million you need to close. Cause but you start, I think you stack bricks, right? Like you got to stack the bricks. You did your first project, your multifamily in Long Beach. You just keep stacking it. Do you guys own that company, you and your brother still, or did you guys sell that?
So my brother bought me out. He still owns it and runs it.
That's good. And that seemed like, with 75 employees, that's a pretty big revenue, top line revenue business. So, so then you just took your funds and then you started doing your real estate projects with that funding.
Yeah. Yeah. So I've invested in all of my deals, and sometimes I've been the largest investor in my deals, but yeah, I got a lot of my, I guess, initial capital from that. And then working with investors on trying to bring, good, like institutional quality investments to people that wouldn't otherwise have access to them. That's essentially what syndication is. So, but yeah, selling the business certainly helped. Running the business and growing a business has been a great background for me. I actually joined a group called the Entrepreneurs Organization, which is a global organization of 17,000 members worldwide, which has been really helpful in networking with other business owners. And then, now I focus mostly on trying to help entrepreneurs diversify their income stream to include some passive income. So I actually have an ebook out about why entrepreneurs should invest in apartment buildings. And those are like the investors that I really try to focus on and help.
And where can people find that book and find more about yourself?
Yeah, so just best spot is at our website, csqproperties.com. You can download a free copy there. And also all social media channels just at CSQ Properties. We try to put out a lot of the content about educating people on the importance of passive income and, something else to think about besides maybe just their high W-2 or maybe running their business, just to think outside the box a little bit. You might think yourself down the road later.
That's cool. And it's cool as I was listening and like reading your kind of your one pager that you're continuing to always pour back into masterminds and learning. I think that's another thing that I look for, like as a LP and investing in your deals, is the guy, like he's got a growth mindset, right? That's the key on all this. Like if I'm looking at somebody to invest with, with my hard money, I'm going to invest with somebody that's like, networking is going to these events is like going to like higher education where there's really high level syndicators around you. So that's good to see. And like, cause you could easily say, hey, I've done enough school, but you're constantly learning and that's pretty impressive. So that was really an amazing interview. I really appreciate you joining us. I think you dropped a lot of nuggets and you have just a very interesting story, different background. So I really appreciate it. I know the viewers, when this is edited, will enjoy the conversation, and you guys could go and download the book. If you're an entrepreneur looking for passive income, which all of you should be, if you're working a W-2 job, you should definitely be looking to invest in alternative assets such as real estate. So thank you so much, Chad. I appreciate it.
Cool. Thanks, Beau.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.